It's time for the market prep video here on Stoncast for the week of July 21st. Folks, it's happening again. The meme frenzy is back. We will break down everything you need to know about Opendoor. We talked about it last week. Since then, it's up another 50%, up over 90% last week. We will break down everything you need to know about this play. Also, we will break down key economic data coming up this week and key earnings as the Magnificent Seven kick off earnings this week for Q2. Stick around for all that and much more. Make sure to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's get into it. Welcome back to Stoncast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back. It is July 20th, folks, and we got a big show to get into, so let's hop right into it. First of all, let's do a market check-in. We had a ton of hard data that came out last week that was overall very good, and the markets reacted accordingly. First, a quick look at the S&P 500, and as of right now, we are sitting pretty. We hit a new all-time high on Friday, and if you've been following the show for a while, I've been laying out some of my Fibonacci extension levels, which are very handy when you're trading at all-time highs. And it looks like we're creeping up to my first target here of 63.34. Beyond that, I'm looking at 64.67. But we closed Friday at 62.96. But again, an all-time high on Friday. The insane run that we're seeing in the market continues. We got CPI, PPI data last week, and all of that came in line. We had some employment data that came in on Thursday that looked great as well. And so overall, the market is taking it in stride. And now that we're in earnings season, we had banks last week that reported, and all of that looks fairly good. I know Goldman Sachs in particular really crushed it as far as trading revenue especially. And so overall, the markets like what they see so far. Let's do a quick check-in on the NASDAQ 100 index. This as well hit an all-time high on Friday and continues to crush it as well. If we do a quick check-in on the Russell 2000 via the ETF IWM, this is kind of consolidating right now. It was red on Friday, down about 0.7%, but we are above all three key major moving averages, being the 20, 50, and 200-day moving averages. So as of right now, looks like small caps are kind of consolidating. But if the market continues to rip, I would definitely expect to see this continue on an upward trajectory as it continues to lag the overall market, right? The S&P 500 and obviously tech. A quick check-in on the VIX. The VIX right now sitting at 16, continues to come off, and again, showing stability in the market and confidence overall. Let's do a quick check-in on Bitcoin. So at time of recording here, Bitcoin is looking decent. It is currently sitting at 118,255, up about almost 0.3% on the day. And this kind of similar to small caps, kind of looks like we're just consolidating right now in Bitcoin. Obviously, we had the all-time high last week of 123. And so again, this is a risk on asset. So if we see the markets continue to rip, especially tech, I would not be surprised to see Bitcoin make another all-time high. And we're already getting some very bullish call-outs. This one, for example, here stating Bitcoin's explosive trajectory to 150,000 by October is now inevitable, according to Cooper Research. So a lot of bullish calls coming out right now on Bitcoin. And hey, why not? This thing just continues to rip. We know it's the reserve now. For the US, and, there's just a lot of big money that's going to continue to pile into this as we get more crypto-friendly legislation Obviously, we got the crypto legislation that finally passed last week, and so that's also going to fuel Bitcoin to new all-time highs, in my opinion. All right, let's do an economic calendar check-in to see what we got coming up for this week, for the week of July 21st. We got Fed Chair Powell speaking on Tuesday, July 22nd. That's going to be 8:30 a.m. Eastern Time. I would definitely be tuning into that just to kind of get a take on whether or not we're leaning more dovish or hawkish at this point. Obviously, as we've covered numerous times on this show, Powell has held strong against the administration who, they obviously want rate cuts. Powell doesn't believe we're in a position to do that yet. And so him speaking on Tuesday, look, it could be a nothing burger, but we might get some interesting feedback from him. So definitely have that on your radar. That could be a volatile move in the overall markets, depending upon what he says. Wednesday, July 23rd, we're going to get existing home sales coming out at 10 a.m. Eastern. This is going to be a key indicator to essentially see the state of the housing market, real estate, right? Are we, having the housing market kind of bounce back a little bit? Are we winding down? What does it look like? Obviously, interest rates being cut by Fed Chair Jerome Powell would be very, very helpful to the overall housing market. So we will see what that looks like. The previous was just over 4 million. 4.03 million to be exact, and the forecast for Wednesday's existing home sales number for June is 4.01 million. So we'll see. It's expected to come in a little lighter. We'll see if it comes in heavier or not. And this is a key economic data for our next segment, which I'll get into here in a moment, related to Opendoor and, just that overall meme frenzy right now. Thursday, July 24th, we're going to get initial jobless claims coming out at 8:30 a.m. Eastern. You're going to get S&P Global Manufacturing PMI and the Global Services PMI, both coming out at 9:45 a.m. Eastern. New home sales come out at 10 a.m. Eastern on Thursday, July 24th, previous of 623,000 with a forecast of 651,000. So an expected uptick in new home sales there. And then durable good orders month over month for June will be coming out on Friday, July 25th. Now, as far as we stand right now, like I said, Powell's going to be speaking early on this week. Let's do a quick check-in on CME Group to see what we're looking at. We do have that Fed rate decision coming up on July 30th. And as of right now, folks, that's looking like a nothing burger. We got a 95% chance that we stay right where we are. Less than a 5% chance of a 25 basis point cut coming in July. And if we take a look at September, as of right now, we have about a 58% chance of a 25 basis point cut. So that's where we stand as far as probabilities of a Fed rate cut. Looks like July, everyone knows what's going to happen. It's going to be similar to last month. Nothing's going to happen, right? I think what will be more important for next week's Fed rate decision will be, of course, Jerome Powell's prepared remarks at 2:30 p.m. Eastern next Wednesday, kind of laying out what his vision is, what the Fed's plan is as it relates to a potential rate cut coming in September. So that's where we stand right now as far as, a potential rate cut. Now, also this week, keep in mind, we got big earnings on deck. As I mentioned at the start of this episode, we had banks that, had big earnings last week. Overall, looked pretty good. We had American Express reporting last Friday, which was a good insight into the consumer as well. And so this week, as we head into a new week of July, the week of July 21st through the 25th, you got some Magnificent Seven reporting. You got Tesla, you got Google. We're going to get Verizon before the bell on Monday. So a lot of big hitters coming in this week. Just some of the notable ones, high profile reports to watch. Like I said, Google, so Alphabet, is going to report on Wednesday, July 23rd. Analysts expect strong growth driven by AI, cloud, and search ads, but AI disruption is a looming wild card. Also, Tesla on Wednesday, delivery numbers are going to be a key focus. Also, robotaxi rollout and Musk's renewed direct management with mixed signals on demand. You're going to get Intel Tuesday, July 22nd. Investors will be watching how the new CEO addresses layoffs. shifts in semiconductor strategy. Coca-Cola, one of Warren Buffett's favorites, reports Tuesday, July 22nd as well. Expected EPS of 84 cents, with consumer demand trends closely being monitored there by investors. Verizon, as I mentioned, Monday to kick off the week, July 21st. Obviously, a key telecom player kicking things off. Want to look for commentary on, subscriber trends and basically 5G momentum. So that's going to be really some of the bigger takeaways, I would say, for this week. And really, at this point, we've gotten the hard data that came out. The market's at all-time highs. Really, the only thing to ruin this run right now, I think, would be, well, of course, you got tariffs and the uncertainty there. But really, at this point, folks, it's going to be earnings. Our earnings going to back up some of the hard data we're getting. Are these companies going to give guidance? That was a big thing in Q1. You had a lot of companies pulling guidance because they didn't know what was going to happen as it related to President Trump and his administration and basically their fiscal policy, right, as far as tariffs go. And so whether or not we see companies giving forward-looking guidance is going to be a huge indicator for investors and something, a leg to stand on, if you will, to have some confidence moving forward. So that's what we got for earnings. And now let's jump in to the meat and potatoes. Folks, Opendoor is surging, absolutely surging. This, according to Yahoo Finance. Opendoor stock records 180% weekly gain as retail frenzy cements meme status. Opendoor Technologies stock delivered a 188% gain on the week after a trading day that saw the iBuyer penny stock rocket upward another 36% on Friday, following a bull thesis for an outdoor turnaround posted on X on July 14th by EMJ Capital Principal and Carvana spotter Eric Jackson. The stock has firmly entered retail meme stock status. Retail trading activity in Opendoor stock has increased 140% over the past 10 days compared to the preceding month, according to retail investor data provider VandaTrack. This thing has been rocketing. After reaching a high of $39.24 in February of 2021, shares of Opendoor had fallen to under $1 each. The latest retail rally, fueled by Jackson's thesis and speculative posts on the meme stock Reddit forum Wall Street Bets, has begun to push the company toward the $5 line. That would lift it out of penny stock status. On Friday, the stock closed at $2.25 per share and then went up even higher in after hours to about $2.60, $2.65. The question for Opendoor leadership will be what it can do to maintain the momentum and potentially reach Jackson's price target of $82 per share. Opendoor uses iBuyer real estate technology to buy homes from owners for cash, make light repairs, then flip them back onto the open market to hopefully resell at a profit. Jackson told Yahoo Finance that while he isn't currently making an overt activist play on the company, he has heard several ideas that, quote, if you waved a magic wand and suddenly the ideas were announced this afternoon, I think would cause an eruption upwards in the shares, is what he said. Several factors contributed to Opendoor's stock price falling below $1. The combination of a declining housing market and rising interest rates put pressure on the company's bottom line at the macro level, and its heavy use of borrowing to acquire and quickly flip homes has saddled the company with debt. As Jackson noted in his X thread, Opendoor has never notched a quarter of positive EBITDA. So Opendoor is a very, very interesting company. We talked about this last Thursday for our midweek check-in here on Stockcast, and I just love seeing another meme stock just, lighten up the internet. It's great to see. It's been a while. Obviously, we had AMC and GME, the historic runs back in 2021. And really since then, we've had a few pop here and there, but it's been a while since I've seen so quickly a retail community latch on to a company the way they're doing with Opendoor. It feels very reminiscent of 2021 with AMC and GME. And I'll kind of break down what are some of the main differences between the two and what you should be potentially looking at. And really what I want to do is just give a rundown on why this thing is popping off right now. It's lighting up meme stock forums like Wall Street Bets. So there's a couple ways you can track that. Of course, you can go on Wall Street Bets and see if things are, what posts are getting upvoted, things like that. But it can be a bit confusing. There's a lot going on. I like to use some websites that kind of aggregate all the data. And so one of those is Swaggy Stocks, which we've mentioned on the show before. Now, the problem with Swaggy Stocks is that they are a bit of a lagger in some of the data they get. So as of right now, these are trending, most social volume. Right now, the top one, according to them, is NVIDIA and then Tesla. You got Webull on there. I don't see Opendoor listed on here, though, and I know that's not correct because it's all over social media right now. So they are a bit of a lagger. So another one I like to watch is apewisdom.io. This is going to lay out trending stocks on Reddit in the past 24 hours. And as you can tell here, surprise, surprise, number one ranking is Opendoor with over 491 mentions in the past 24 hours, over 5,000 upvotes. It is clearly the top of the chain as far as what is trending right now. And, basically Eric Jackson is one of the guys that kind of started this entire meme frenzy. Again, he put a price target upwards of $80 on it. He is not taking an activist position, but he has confirmed that his firm does have a position in the company. But typically Eric Jackson is going to be the kind of guy being an activist investor where he will, come in, take over a 5% ownership of the company and really look to change management, change things around. And so Pershing Square is another firm that's well known for kind of activist positions as well. And so he's not taking, quote unquote, an activist investor position in Opendoor right now. That being said, he does have a position on it and is obviously bullish on the company. So this was an interesting tweet from him at Chamath. Things are moving at Open this week, but the fam wants you back. So for those of you who don't know, Chamath Palihapitiya is a Sri Lanka-born Canadian-American venture capitalist, entrepreneur, and former tech executive. So the reason why Eric Jackson shout out Chamath is because he was the one that basically started this company, started the SPAC, and I'll get into what that is here in a minute. But just a little bit about Chamath, just so you know. He started in tech and career highlights here, according to GPT. Tech and early roles. He was a derivatives trader in Canada before moving to California to work at AOL. He joined Facebook in 2007 and played a key role in expanding user growth to over 1 billion by 2011. In 2011, he founded Social Capital, a venture firm focused on areas like healthcare, education, climate, and deep tech. He is known for executing high-profile SPACs. He helped take companies like Virgin Galactic, Opendoor, Clover Health, and SoFi public. And so, when we talk about SPACs, basically what we're talking about here are special purpose acquisition companies. It's a publicly traded blank check company created solely to raise capital through an IPO with the intent to acquire or merge with a private company, thereby taking it public without going through a traditional IPO process. Basically, the way it works, how a SPAC works, it's formed by a sponsor, often a well-known investor or executive like Chamath Palihapitiya. It goes public via an IPO, but it has no actual business operations. It's just a shell company with money. You search for targets. They typically have 18 to 24 months to find a private company to merge with. And then once the target is found, shareholders vote on the deal. Merger equals going public. So if the deal is approved, the target company merges with the SPAC and becomes publicly traded under a new ticker. And then if no deal is found, investors get their money back. So this is the whole idea of SPACs is something that Chamath really was a proponent of and at the ground level with. So, one of the advantages to them is that they're faster and cheaper than traditional IPOs, fewer regulatory hurdles. They gave everyday investors access to early stage growth companies, right? So they became really popular 2020, 2021 boom. But also there's some risks and criticisms about, SPACs. They, have taken speculative or unproven companies public, like Nicolia, or wow, I can't even talk today. Clover Health, right? And so, they haven't all been great, basically. Valuations are often inflated, lack of transparency compared to IPOs, and many SPACs underperform post-merger. So anyways, all that to say, Chamath was the one that really got Opendoor going, and Eric Jackson throwing out a tweet to him saying, hey, look, things are moving, but the fam wants you back. So obviously this got the retail community very, very happy. Chamath is a huge player, a huge fan of the retail community, wants to give access to everyone when it comes to investment opportunities, hence the reason he started SPACs. And so it's very interesting. We'll see if Chamath says anything about Opendoor and some of the movements it's been having. But just the fact that you're getting this massive retail hype right now is, again, very reminiscent for me of 2021, AMC, GME, things like that. And the memes are they're just flowing right now. I mean, you got Pepe. We're adding Opendoor in here now alongside AMC, GME. Got Carvana. Love it. Open. Here's another fun meme. And so this thing is obviously lighting up all the social forums and getting a lot of traction. And, the fact that, right now, the valuation of the company is just over $1 billion. And so somebody asked Eric Jackson, what is your price target? This is a post that he put up. Everyone keeps asking me, what's Open worth now? We know it's worth $82 in a few years. The answer is it's worth $40 now after they report a profitable quarter, with hints that they are at steady state profitability going forward. They'll do $5.75 billion in revenue next year. They deserved a forward EV/revenue multiple of 5x like Carvana. $1.2 billion net debt, $559 million in cash, 723 million shares. So very, very interesting. And the fact that he's saying, hey, look, the value of it right now is $40. He thinks it could be $82 in a couple of years. Now, you compare that to where it's trading at right now. I mean, this thing, according to that, if accurate, has a ton of room to go, folks. Closed on Friday at $225. And if you just look here, the average volume, I didn't even look this up, but the average volume for the stock, I would say, is somewhere around, I would guess right around maybe like 30 to 40 million shares traded per day. And just Friday alone, we got over 500 million. I mean, that's absurd. 589 million shares transacted on Friday. You can just tell this volume has just been increasing over the past week. It's gone up and up, and we saw two of the highest activity days for the stock in its history on Thursday and Friday, respectively. So a lot of attention on Opendoor right now. It is above the 200-day moving average. Now, I would say this, I always like to talk about the RSI. I think it's important right now on the daily chart. You got an RSI at 90, folks. This thing probably needs to cool off just a tad bit before we get more of a run up. But nevertheless, I mean, things can go up, and RSIs can stay overheated for quite a while before they pull back. So I'll be very, very curious to see, what this week looks like. Now, just some things to point out regarding this company, right? Let's get into just a little bit about the short interest, right? Because if this is a short squeeze candidate, which a lot of my degenerates out there, the Wall Street Bets community, that's why retail is into this thing. They believe it's undervalued. They believe that this has a high short interest and it could just get squeezed. So if we take a look at the short interest according to Fintel for Opendoor Technologies, right now the short interest is over 135 million shares with a short interest ratio of 1.49 days to cover. Short interest percentage of the float, this is what grabbed my attention, currently sitting at about 20.73%. That is very high. Anytime you see anything over about 10%, 10% is about average, I would say, for majority of, stocks and in the market. You're going to see roughly about a 10% short interest. So the fact that you have double that on Opendoor is pretty significant. Now, if we compare this to some of the meme frenzy we had in 2021 with GameStop and AMC in particular, the short interest doesn't even compare, to be clear, to, GameStop. GameStop had basically a short interest of 140% of the float. That is absurd. Over 100% of the float was short. So we're not that high on Opendoor, but as it relates to AMC, for example, AMC was right around 20 to 25%, shares that were short back in January of 2021. So this is kind of in line with where AMC was, not nearly as crazy as GameStop. So just want to put that in perspective as far as short interest. Sometimes when you get these meme stocks that start flying, you get a lot of people that are just super active and really gung-ho, and they can throw out misinformation, and I want to make sure I don't do that. So to be clear, the short interest on this is not anything near what GameStop had. That being said, it is still relatively high for what you would typically see in the stock market. So that's what we got for the short interest. Now, the interesting thing about this company is the fact that their whole business is buying and selling homes. And as I was just mentioning earlier, as it relates to the economic calendar for this week, we got some key things that might be pertinent for Opendoor investors, traders. The fact that we're going to get existing home sales again on Wednesday and also new home sales on Thursday. If those look positive, those numbers look positive, that could be a great early bullish sign for Opendoor. As far as interest rates go, the fact that we have interest rates right now that are still pretty high, that is hurting Opendoor. But really the bull case, according to Eric Jackson, is the fact that we are going to get rate cuts. We're going to get quantitative easing that will be coming in the following months, as early as 2026. And when we start to get those rate cuts, that is going to significantly help Opendoor based off of what Eric Jackson is saying. So you have really a recipe for a potential very, very interesting play when it comes to a meme stock here. And listen, I talked about this on Thursday, right? Thursday was the day we got above the 200-day moving average. Typically, after a couple days ramp up like this, you would expect to see a dump. You would expect to see sellers step in, drive it back down. We don't have that right now. This rally is continuing, and to add to it, you have short interest, check. You have key investors on social media like Eric Jackson talking about it, investing in it, check. You have, the Wall Street Bets Forum on it, check. It's the number one trending stock right now. It's all over the internet, check, 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 check. So you have a lot of things kind of lining up, a lot of confluence, I would say, for a potential massive move. Now, as far as where this thing could be, potentially going, I zoomed out to a 10-year weekly chart and laid out some key Fibonacci retracement levels based off of the all-time high of $39.24 and the all-time low of 51 cents, right? And so based off that, some of the key levels I'm paying attention to would be 965, which is technically the 23.6% Fibonacci retracement level, right? So basically, let's call it $10. That's going to be a key psychological level. Also $15, $15.30 to be exact. That is the 38.2% Fibonacci retracement point. So really 10 and 15 are some very, very bullish levels that I'm paying attention to that I think this could potentially go to in the short term, right? In the short term. I don't think this thing is going to $40. I don't think it's going to $80 in the next month or two. Hey, you know what? Who knows what could happen over the next couple years? Eric Jackson could very well be right, and this could hit new all-time highs. Could be very similar to Carvana, which went from like $3 to $300. but in the very short term, that's what I'm watching. And to be clear, right, this is not financial advice. I do have a position in Opendoor. I do have shares. I do have some short dated calls for August and some longer dated calls for January as well. So if you are going to be playing this, make sure that you have an exit plan. For me, these are the levels I'm paying attention to. If in the most bullish case, we get to $10, I'm of course going to be trimming some of my position. I'll probably sell my short-term August calls. Honestly, I'll probably sell them well before that because my strike is 350, but let's see what happens. We might get crazy on Monday in pre-market. This thing has been getting hyped over the weekend. I mean, just think about summer in general. It's kind of quiet, right? That's why you have movie theaters putting out some of their best hits over the summer. People are chilling. They're taking vacation. They're kind of hanging out, laying low. It's hot outside. You want to be inside, right? People all weekend have had nothing to do but scroll the internet and learn more about this company. I think we're going to get some massive retail hype continuing into this week. Now, some things to notice and pay attention to as it relates to Opendoor. We do have an earnings report that will be coming up very soon. I believe it's August 5th. Now, one of the very, very important things to have on your radar about this company is the fact that they are toying around with the idea of a reverse stock split. So basically, to remain compliant on the NASDAQ, their stock price needs to remain above $2. And before this past week's craziness, they were not there. They had an all-time low very recently of 51 cents. So because of that, to stay compliant, they entertained a reverse stock split where they would essentially, reduce the number of shares. It could be a 1 for 20, 1 for 30, 1 for 50, something like that. It doesn't change the market cap, the valuation of the company, but it does jump the price of the stock naturally by consolidating shares, and it would make them obviously compliant. Now, if they did a reverse stock split, that is typically seen as a bearish sign. It shows that the company does not have confidence in their own stock, and that's not good. So if we can manage, big if here, but if we can manage to maintain some of this bullish momentum over the past week, stay above $2, heading into that earnings, there is the possibility that the board decides to take that off the table. If they decided to take that reverse stock split off the table, that would be a very bullish, confident sign. Also, keep in mind, Eric Jackson has called out for the CEO of Opendoor to make an open market purchase of shares. Show some confidence in the company. Let us know that you believe in this, right? Maybe a share buyback, something like that. So we will see what happens with this. It is a very, very interesting, entertaining news headline in the market right now. I would definitely have this on your radar, whether you're a long-term investor or a degenerate, right? We cover both here on Stockcast, but I think this company has a lot of potential. And I think that if things go the right way with management and they play their cards right, I mean, just look at the iBuyer industry. You had some other notable companies that dropped out of that. So really, there's no competition for Opendoor here. Again, all this is contingent upon the retail community, of course, staying interested in this, right? If we see volume drop off, this thing could die off. But, if we continue to see the meme frenzy pick up, we see shorts covering, this is all a recipe for a very, very interesting play. Not to mention the fact if we get interest rate cuts and, that would be bullish for the real estate market, that would be helpful to Opendoor as well. And just as a point of reference, I mean, this is Carvana, right? Carvana was at $3 back in January of 2023, and it is at $3.47 right now. And that wasn't the first time it made a rally like that. It did that before too, when it got low as $25 in 2020, and then rallied to $3.76, and now it's closing in on a new all-time high. So, not saying it's going to exactly look like that, but the potential is there for a very, very interesting play. It's usually at the ground level that you want to get in on something like this. And when I look at this 10-year weekly chart, this looks like the ground level. The past week is a very bullish candle. Looks like a change in the trend, historic volume. And so with all that being said, let's see what happens this week ahead. I will, of course, be, breaking this down again to kind of see where we're at with the midweek market check-in. That'll be dropping Thursday, as always, 8 a.m. Eastern. So make sure to tune in for that. Let me know what your thoughts are on Opendoor. Do you think this is going to tank? Do you think this is the beginning of something similar to GameStop and AMC from 2021? Would love to get your take on it. Thanks as always for the support. Make sure to like, subscribe, share with a buddy, listen wherever you follow podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.